Look, gotta follow the data, ain't no time to air. Watch him speak now, with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew, navigating through the markets, knowing what to do. Federal Reserve's in control, making moves, keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Ladies and gentlemen of the Open Market Committee, I am Super Chairman Tom Powell, and I am honored to meet my esteemed colleagues, members of the press, and of course the Tom Crown community. Shout out to you guys. It is my distinct honor to address you today as we stand on the precipice of what might be one of the most pivotal, historic FOMC meetings in all timelines, dimensions, and universes. Today is the day. As we gather here, our nation and indeed the world watches with bated breath. The data leading into today's meeting has painted a complex picture, one that requires careful analysis and prudent decision-making. Firstly, let's reflect on the economic indicators that we've observed recently. U.S. retail sales figures for August have surprised many, coming in stronger than anticipated, with an upward revision for July's numbers as well. The resilience in consumer spending, despite various headwinds, suggests an underlying strength in our economy. Industrial production, alongside retail, industrial activities have also shown robustness, indicating that our manufacturing sector continues to recover, if not thrive under current conditions. The Atlanta's Fed GDP Now model suggests a 3% annualized growth rate for Q3. This is not just a number, it is a testament to the resilience and dynamism of the American economy, even as we navigate through uncertain global waters. This morning's data on housing starts and building permits set a tone of cautious optimism. While not in the headline events today, these figures remind us of our housing sector's critical role in our economic narrative. Now, as we approach our decision today on interest rates, here are the key points that we should watch for. The first being the expectations. There is a palpable expectation in the market for a rate cut, with significant chatter at 25 BPS and 50 BPS, and even some of my colleagues suggesting higher. This decision will not only affect borrowing costs, but it will signal our confidence in the economy's current trajectory. Although not at the forefront of our discussion today, falling inflation rates will influence our long-term strategy. We must remain vigilant, ensuring our policies foster price stability. One of the biggest things that my colleague Chairman Powell will show you today is the updated dot plot. This is our economic projection, and we do this under intense scrutiny. These will outline our roadmap, providing insights into our expectations for growth, inflation, and unemployment. Finally, while our mandate focuses on the U.S., we cannot ignore global context. The interconnectedness of economies means we must consider international developments in our deliberations. In my speech today, I wish to emphasize the importance of balance. Balance is the key word. We are at a juncture where strength of recent data suggests less need for monetary accommodation, yet the forward-looking markets are pricing in significant rate cuts. Our challenge is to navigate these expectations with the real economic data at hand, ensuring we neither stifle growth with premature tightening, nor fuel future inflation with excessive easing. As we move into these discussions, let us remember our dual mandate: maximum employment and price stability. Our decisions today will be a testament to the commitment of these principles, crafted not just for the markets, but for every American looking towards a stable and prosperous future. Thank you. Let us proceed with the wisdom and foresight that the committee has strived to uphold. And now I will turn to my colleague, Tom Crown. Thank you for joining me. What's up, fam? It is today. Today is the day. The day we've been waiting for. On this channel, we have covered Jerome Powell and his world tour of fame. I want to say for 4 years now. We were doing it before. It's cool. Thank you for joining us, guys. I know you have a choice in where you watch these, and I'm glad you've chosen the right one. With the OGs, with the family. Good to have you here. We had over 550 waiting. I do believe that's a record. This stream living up to its name, the biggest FOMC ever. Some of our friends, like Benjamin Cohen, like to kind of make fun of us when we say, this is the biggest one ever. They're all the biggest one ever. But this one, actually, for real, no clickbait, is the biggest one, at least in many, many years. Let's take a quick. I'm still learning words today, guys. A little quick. Let's take a quick jump over to some of this data I got pulled up. Hold up here. Let's first look at our federal funds effective rate graph. This is going to give us a good background of the last few decades and what interest rate changes we saw over these FOMCs. So Bitcoin, always the topic here. Let's zoom in to when Bitcoin existed. Interest rates had fallen to 0% right as Bitcoin was born, and they remained at roughly 0% all the way to 2016 for a period of about 7 years of zero interest rates. From 16 all the way up to 2019, you all remember this, interest rates reached 2.42% before essentially being set to zero into the March COVID crash. They remained at zero again all the way until March of 22, where they reached the current rate of 5.33% in September. And since September, so that's almost, no, it's an entire year. We reached peak rate September last year. Here we are, FOMC, September this year. And we're finally going to see this peak rate come down. That's what it seems like. I have been very much skeptical that these interest rates would be actually done before the start of next year, but it does seem like if it's going to happen, today's the day. And this sets us up for a very spicy stream, my friends, an incredibly spicy stream. In fact, the reason being is the entire market, all analysts essentially, with very little exception, have extreme confidence that today is the day we get the first cut. There's really, I see maybe 4 outcomes here, right? Today, we have a poll in the live stream on YouTube, youtube.com/TomCrown. We have a poll going on. Let me know what you guys think is going to happen. Let's go with what everyone expects. Let's start there. 25 BPS cut. This is so, I want to say, entitled or already accepted that this is going to happen, that markets have definitely started to price this in. They've started to react. We're going to look at T-bill yields here in a minute. That's going to back this story up. But let's say we get a 25 BPS cut. Though it will be the first cut after reaching peak interest rate, whatever. After reaching peak interest rates, it'll be the first hike. That's huge, but it's actually maybe the least spicy outcome that could happen today. And that is really an interesting position to be in. We have watched these every single month, and every single month there's excitement about a cut and we don't get it. And it's weird to be here in September and think a cut might not even be kind of even that bullish. Might not even be that exciting, because that's what we expect. And remember, markets are big fans. They're monsters of stability. They don't like mix-ups. They don't like surprises. Even if things are bad, markets prefer to be predictably bad than randomly chaotically bad. Let's put it that way. I would expect not a huge reaction. I would not expect a huge reaction from 25 BPS today. I think that's really what we expect, and probably business as usual. So let's go the other way. Let's go to something that is at this point considered almost off the table by some analysts. No cut. No cut today might actually be the biggest mix-up, which is really weird, covering these over and over and over again, to think the thing that we're all kind of complaining about over the last few FOMCs might be the spiciest outcome. Remember, markets do not like mix-ups, and no interest rate cut may whip up some serious volatility. We've seen indices reach back to all-time highs. Bitcoin trading 59.6, no surprise there. It's just doing its thing. That would be actually very wild. So there are a few other options here, and that's a 50 BPS cut. And there is an argument to be made for 50 BPS. That is going to be seen in the T-bills. I'll just pull this up now. Let's pull up the T-bills now. Argument to be made here for 50 BPS. It's not just random. I thought it was like kind of random. Like, why are people calling 50? So looking at T-bill, treasury bills, basically buying a little loan from the government, making interest. These are supposed to reflect interest rates. So the yellow here is the 3-month. I'll go ahead, actually. I'll hide the 6-month and the yearly on this one chart, but the yellow is the 3 months. This is basically what people are betting on the interest rate being in 3 months. And we can see that's down at 4.75%, down from the high of obviously 5.33%. What's interesting is actually last year this began to come down, yet no interest rate change until potentially today. Kind of an interesting setup. When we look out to the 6-month and the year, let's pull these up. 6-month already down at 4.41. It's like 4.5%. That is what is it? A good 25 BPS lower. So if we go by the T-bill yields, which don't have to be correct. Remember, we started to see the 3-month fall in October of last year, despite no interest rate change. The story here is that the market is looking for a 50 BPS cut in the next 3 months. We can see that here on the 3-month projection. 50 from 533 to 475. In the 6-month time frame, so half a year, we're looking for essentially 100 BPS. We go out to the yearly view. This is the 1-year T-bill, and it's already down at 3.81. So if we were to accept that T-bills are going to tell us the future, we would expect to see a 50 BPS today, potentially, or it could be a series of 25 BPSs. One now, one at the end of the year, into 2025, that bigger look into the next year. So say looking into 2026, markets are expecting these rates to drop pretty steadily from, I'll say now, until a year from now, reaching 3.81%. I didn't want to spend a crazy amount of time on the T-bills because I will admit to you guys, I don't LARP. This is not my area of expertise. I've just started to learn about these maybe a little bit ago, really understand why people pay attention to them. But I did find something really interesting here that I wanted to share quickly that just is a testament to charts. Not all of us in here today are big chart people, but most of us, I'd say, are chart people. So a lot of people think charts are a bunch of BS. That's fine. They can live that life. I found something really interesting while I was just kind of dabbling on the 3-month chart last night. If you look at 2019's high of interest rate, that was at 2.4, 2.5%, down to 0% in March. Check this out. If you take your fib tool, we do this with charts constantly for those who aren't really tuning in day to day for the trading and chart stuff. We use this exact same analysis on all kinds of assets, all kinds of charts, and we have really solid results versus a lot of other methods. So I'm going to take just that high. I'm going to connect it to that 0 low. This worked out better yesterday. Son of a bee. This worked out better yesterday. But either way, it's kind of interesting. This is the analysis we use to kind of find breakout targets that might not be found otherwise. We look up to our 2 extension or measured move target on our fib tool. And what's interesting is kind of again, the fib tool has shown us a potential high in the future. Now, it wasn't perfect. This is 4.85%. Of course, we know we're at 5.33%, but that is really close to the top. And I swear to God, when I did this last night, it actually, it was like the exact number. I don't know. Something changed here. That's okay. Never try new stuff live. That's what they say. Where was I? So thank you for joining us again. Make sure you've smashed the like button, subscribe during the live, share out the stream. This is going to be the biggest FOMC ever, and we have some time. So here's our timeline. It is currently 1:21 p.m. Tom Powell has already spoken. He's given us a very intelligent, handsome overview of what to expect today and what we'll be looking for. I'm going to agree with him here. We're definitely going to be looking for updates to this dot plot. Let me make this bigger. That's not very helpful. We'll hide this. Updates to this dot plot. We heard a lot of rhetoric from Chairman Powell himself about how it's time. I believe he said it's time. The time has come or something to be less restrictive. This is basically, how to describe this? This is a dot plot. There you go. This is showing you where members of the FOMC weigh in different timelines of where they see interest rates. It's interest rates, right? Yeah. Target ranges. This has been pretty static. A lot of people, or almost everyone on the board unanimously not ready for interest rate cuts in the last meeting. See, you can even see 2024, every single dot sitting right around this 5.3 area. Looking into 25, we can see they're reflecting again, I'll say the bond market, about 100 BPS down, and into 26, around that 3% level, 200 BPS. This is all going to change today. All of this is going to change provided we get an interest rate cut. No member is going to be betting that interest rates will be the same at the end of the year if they already know they're getting a cut today. This will be big stuff. This is absolutely something to be paying attention to. Even more so maybe than the actual decision today. We're going to be looking at their forward guidance, the rhetoric they use. I'm going to be paying attention specifically to any suggestion of future cuts. You know we're going to have some great questions at the end, specifically by Gina and Asian Gina, and we're probably just going to, sit through everyone else talking. It's just the price we got to pay. I said it was 121 at 2 p.m., so you have this on here. Yes. We got this on the chart. We have Bitcoin at the top, our typical FOMC live stream setup. Bitcoin on the top, stocks in the middle, dollar on the bottom. I was also reading something that 25 BPS cut may not be enough, and we may see the dollar gain some strength. That's actually what's happening here on low time frames right now. Keep getting distracted. 2 p.m. So we have 40-ish minutes until the interest rate decision comes in. And when I say comes in, for those not familiar, for whatever reason, they publish them to like news sources. I say this every month. No idea why they publish them directly to like news sources. We have a little activity we do where we're all going to Google and we're going to look to see who can get that decision in the live chat first. The winner gains a lot of honor. So I have my alert set, I think. Let me make sure I have my alarm so I don't miss it, because sometimes I'm rambling on and I miss it. That's only ever happened like once. Okay. 1:56. Perfect. Got my alert set. That'll be coming in. And at 2:30, we have Chairman Powell himself speaking. Oh, man, I can't wait. I can't wait. We've been having these meals of nothing burgers every month. I'm ready for something substantial, something spicy. It's going to be real spicy. Let me see some of my notes here. I'm going to get to the chat in just a minute. Some opinions on this 25 BPS cut might already be priced in, leading to some profit taking. This is kind of what I was getting at. Maybe some downside price action on 25 simply because it's what people are expecting. They're pricing it in. They're going to look to take those profits. Then market's likely to resume an upward trend after initial reaction. That's pretty much what we know. We've come to know and trust about these. I'll go over the FOMC trading pattern in just a sec. Good reminder. 50 BPS could trigger more bullish market reaction, as it might be interpreted that the Fed is taking aggressive steps to stimulate the economy to prevent a shutdown. However, if expectations are set anything less than 50, then would likely result slightly bearish. That's the thing. This whole meeting is like a mind game. It's like everyone's so sure of something, and now it's like getting stressful because you've just built all your bridges to this location that you knew it was going to be there. You're like, this is where we're going. And we're about to find out if we built in the right direction. And it is something. No cut, considered unlikely based on sentiment expressed. But this could lead to a disappointment in the markets, potentially causing a bearish reaction to the unmet expectations. I think that would be the spiciest outcome. I said it earlier. Tom Powell said it. I'm going to stay with it. Let me see. Anything else I missed on my notes before I jump into the chat? Dot plot, market reaction, implications of the cuts. I think we're good. There. Let me close some of these tabs up. Let's look at our Fed monitor tool here while we have a little bit. According to investing.com, 25 BPS sits at 56% probability today, down from 64%. Interesting. Sorry, that was wrong. 50 BPS. Down from 64% to 54. 25 BPS cut, up from 36 to 44. It seems like kind of into, or as we get closer here, expectations are getting tempered. The bigger, more exciting 50 BPS big cut probability coming down into the actual time of this decision. We have 1 hour and 24 minutes. Thanks, investing.com. Pull this up. CME watch tool. This isn't the one I wanted. CME putting a 45% versus 55%, 25 and 50 BPS respectively. Kind of interesting that CME diverges from the investing.com prediction. Interesting. Who's going to be right? I don't know. Let's look at... I'm going to pull up the chat here, and then we got some other stuff to look at. All right, here we go. We got 1,800 viewers, and 𝐿𝐴 isn't even here yet. Let's go, boys and girls. Let's go. All right. Pulling up the chat. I kind of want to play that 𝐿𝐴 song. By the way, sorry for nuking your speakers. I had the volume all the way turned up because 𝐿𝐴's audio is always trash, so I have to turn it up. We got some new subscribers. What's up? Tim Herdman, Fanman Analog, Christopher Ballard, Enjoy Life Every Day with Charlotte Felix. I will. Raluca77, Vandit Patel. We got a lot of subscribers, boys. Bringing them in. We're bringing them in. We broke 126,000 subscribers on the last stream, and we're already on our way to 127. Vandit Patel helping out. Baldwin Jin, Andrew Staten, Cosmin Oxy, Thomas Lee subscribing. Amy Lives Crypto. Sorry, my darling, I missed you. Gift 5 memberships out. By the way, guys, I'm going to be gifting some memberships out during this live too. Make sure you have opted into gift membership receiving. It's a weird thing to have to opt into. Whatever. Make sure you've sent a message in the live chat, subscribed, try clicking that share button, vote in the poll. The more you engage, the more likely YouTube says you are to win these random memberships. So do that now. Make sure you get all the engagement in, and I'll give some out before the interest rate decision comes through. 30 minutes till then. So let's get this chat going. Where did my box go? That's what she said. Here we are. Keep them coming, boys. Okay. Chat is operational. If you're over on youtube.com, you have almost 2,000 live viewers. If you could, hit these little hearts and such to see what's good. How you doing, Donkey? Sean, Brian, Calizo, Ricardo, Sofa King, Esno, 𝐒𝐳, Jason. What's up, Jason? Espraz, Troy, Matt, Astras, B4 Crypto. How you doing, bro? This thumbnail brought to you by B4 Crypto. And so mining, extreme content, Magic Man, Lord Balthazar. What's up, my friend? Boop. What are the odds Donald Trump comes out and RKOs 𝐿𝐴? Boop. That is maybe the most important question asked today. Guys, what happens? What happens if Trump comes out and TKOs 𝐿𝐴 live? Honestly, I think you get some votes. I think you gain some votes there. I think that's a vote winning move. What's up, Super Volcano? Kier, we are going to be hearing from Gina and Asian Gina today. Both my dream gals. Oh, Asian Gina. You're newer, but you've worked your way into our hearts. What chair button? I don't know. What's up, Salim, Crypto Hunter, Trevor? When is the conference? A lot of people joining, jumping in, jumping out. It's 1:30 right now at 2 p.m. East, so 30 minutes. We got some stuff to do, though. It'll be entertaining until then. When these candles reach this line, the interest rate decision will be in. This is actually a good reminder. I did not go over the FOMC trading plan. So guys, please, we are a trading channel. We preach safe, smart trading, risk management. Please continue doing that. I always warn you guys on these days, I do not trade these. I do not suggest trading FOMC days. The volatility is brutal, especially on leverage. And what we really consistently see is the market moving up and down in some combination through these. That ends up resulting in longs being stopped out or liquidated and shorts, and then price really ends up right back to where they were. That's been the MO for the last few months. That may change today. Today is the first really exciting one in a year plus, basically. Here's how we typically expect trading to go on these FOMC days for Bitcoin. And we've seen this be pretty successful. So basically, whatever direction we see price trending into the interest rate decision, we typically see that reverse. After, like, to the minute, when the interest rate decision is in, we typically see price reverse until 30 minutes later when Chairman Powell speaks. And when Chairman Powell speaks, we tend to see it reverse back in the other direction. There's been many FOMCs where we have nailed price action with this really simple concept, but let me get an idea of what we're doing into this. So I'd say price is trending down, reverse into the stream going live. This one's just the stream going live. We can get rid of that one. Going down, little low time frame. All right. Moving up. I think we'll say that price on low time frames is trending up into the interest rate decision. That may change into 2. We'll see. So we would expect price to move down into Chairman Powell speaking, and then probably roughly back to where it is. That's not the best setup, but this is just like a blueprint. We see this happen so much. If we were going to deviate from this, I would say today's the day to do it. I would say that today's the day, boys. This is spicy. Stocks are up. Dollar is down. Bitcoin kind of up. It is what it is. What's up, Dino? How you doing, man? Daniel N., you are here because Rob told you so. I want to shout out a few communities here. Love Rob. Digital Asset News on YouTube. Great guy. Personal friend of mine. Sending his boys over. So we'll send him some love back. There you go. If you haven't subscribed to this man, makes great content. Really like him. Shout out to the whole Digital Asset News community. Do you have any other communities here? Is the Optical Art Gang hanging out with us? If you're here sent by a different content creator to this stream, make sure to thank them for me and I'll thank them. But let me know. Put it in the chat. Which one are you here from? I missed some names. What's up? 360 Baboon, Al Mascari, Andre, Angik, Anon Solaris. How you doing, darling? Ashley D. Hagar. Good to see you, Ashley. Astros X, Boob, B4 Crypto, Black Cat Cometh, Brian K, Bullish Mike, CJ, Cactus Leo called out, 𝐂𝐴𝐧 𝐓𝐫𝐚𝐫 and Crypto. How you doing, bro? It's been a while. Hope you're doing well. Kodan, my guy, I see you. Correspondences Fictives. Crypto Hawk. Crypto Face is still here. Shout out to Crypto Face, another great YouTuber. Hopefully, maybe he sent some of his crew over here. Let me put his YouTube up. Got to shout out the boys. Got to shout out them boys. Crypto Face, one of my oldest, best friends in this space. Love that man. No homo. There you go. Subscribe to Crypto Face. Does live trading. He's a G. Where was I? I have so many tabs open, guys. I can't even describe to you. Like, usually I have too many tabs. Today, it's like all the tabs. Where were we? We were at Crypto Face. We're only in the C's. I'll go faster. Crypto Greg, Crypto Mel, Crypto Dave, Crypto Military Vet. OG, how you doing, bro? Darko, Darlene Bell, Davey Simon, David Brum. Good to see you, David Brum. G, love your man. David Gelfan, Deja Vu. How you doing, Deja Vu? Demon, Derek Moore, Digital Asset News. Rob himself tuned in to catch the Spice Boys. We're counting down the time. We've got about 25 minutes for the decision to be in. I'm just saying hello. If you're here, put something in the chat so I can shout you out. Digital Real Estate, DJ Morales, Double Chill, Dufresne 01, Echo Punk, Eric Wallen, Eugene K, Fat Shorty, Flat Smack, Folsom Hodel, FOMO Sapien, Full Degen Mode, Funky Action, Games Play, Gary Kaufman, General Anesthetic, Greg. We have thousands of viewers. This is hard, but I want to do it. Greg, Harvin, 𝐒𝐳, Heidi. Forgive me if I mess your names up, guys. Hi, Jinx. Hey, Christo. I am Jess. How you doing, Jess? I need my BTC. Is my life. JP Janix, JC, Gene Fortin, Joseph Gonzalez, Josh Kennington, Juice Toes. Ew. Justin User 17, Justin King, Justin Farrow, Justin Gibson, Kier, Braithweed, King Present, Liquidated Shorts, Loki Singularity, Long Mountain, Lord Balthazar, Lorenzo Moon, Magic Man, Mama Jedi, Masoy, Matt Eins, Malgi Games on X, Mayonnaise, Mike Volmer, Mike 911, Miran, Molly, Mr. Poppy, my boy, Mr. Techno Goody, ND Fun Nation, Neil, Nick Young, Not Meme, Peter, PG, Pori, Falgenis, Powda, Prez, Psychedelic Astronaut, Randy Greer, Rave Songs, Real Rider, Reality So Subtle, Rebecca Leaf Ranga, what's up, Rebecca? Rida Bowdy, Rob Whitney, Robert Jones, Rousen, Roro Crypto, Rowan66, Scotty Too Hottie, Shane, Sheriffo, Simon, Smatoshi, Smiley Gladius, Solar Miner, Stolus Project, Salty Dog, Strats Imply, Stymie, Sun Chips, Super Volcano, Shirley Sound, Switchblade, T-Guy, That Guy, The Beached Whale, Pickle, Biomix, The Metro, Tillin, Timo, Tom G, Tom844, Trent, 𝐂𝐴𝐐𝐴, Vapo Chilled, Verl, your monkey. That's as many as I can do, guys. That is a ton. We got 2,000 live viewers here. Usually we hit peak at about 2:30. So this is just the start. You are tuned in to the biggest, most important FOMC of all time. And that being said, I'm going to gift out 5 memberships here. If you want to spam the chat a little bit, I'm going to gift them out right now. Here they go. If it'll let me. Dude, my computer is running so weird today. And of course, it's like the biggest stream in like 2 or 3 months. And it's just running so weird, dude. I don't know what's wrong with it. I don't think anything's wrong. There's just something like clogging up resources. I think something is, I think I have some kind of loop broken. I don't know, memory leak. Store the chat. Wow. I wish I could show you guys what I'm talking about. It is weird. Where's my chat? Something went wrong. That's a bad sign. That's not good. When this is the streaming link, that's not good. There we go. It's back up. There it is. What's up, Paz Maria? How are you, Paz? GM. God, I hope we don't disconnect, man. I hope my ISP doesn't screw me today. All right. The membership is... It wouldn't let me do it. Let's see if I can do it. I don't know if it's going to let me. Wow, look. Ugh. Maybe I can do it on my phone. This is bad. I want to be able to read the chat. If I can't read the chat, what's the point? All right. Spam. Good thinking. But then I go here and I can't do them. I got to do it on my phone. Bear with me. We're going to look at the corn. We're going to look at some other charts, dollar stocks here in just a sec. We're just giving away a few of these little membies. No, not free membership milestone. YouTube, you got too many options. Weirdly, I can't gift memberships right now. That is very odd. YouTube doesn't want you guys getting these. Whatever. I don't know. Like, it's not an option. Can someone confirm for me? Just click that little support thing and confirm if it's not even showing up. And then if I do click it, it just loads. I don't know. Lame. I don't know. Pickle's here. Pickle, if you want to gift some out, I'll send you monies. Thank you for acknowledging us. I love each and every one of you. The beached whale looking at Hex. Chairman Powell is DDoSing the stream. Boop. I think you're onto something. You're a smart guy. Let's go. Me, please. Looks like it's working. So those are people becoming members. It's the gifting that I'm trying to do. I've never seen this not work. We're getting rugged. Boys. The vote in the poll, we got 2,500 votes. Nice. 45% of us looking for 25 BPS. That's the safe bet. 34% looking for 50 BPS. The interesting part here is 20% of us think that either we won't get a cut or we'll get a cut bigger than 75 BPS. That is another example of just how spicy this stream is going to be. You want a membership? I know, dude. I can't. Membership gifting. Maybe if I open it in a different browser, like, ew. Ew, thank God my bank crap wasn't like pulled up or something. Jeez. Thanks, computer. Just like pulling up. All right, I'm going on a different browser. Maybe I'll be able to do it. This is the last attempt here, though. We got more content to do. There we go. Pickle giving out some. Thank you, my friend. I'll send you the dollars. Dude, it's like specifically not letting me do it. Thanks, YouTube. We won't let it slow us down, though, boys. We ain't gonna let it slow us down. Let's go to the stocks. Stocks have had a hell of a time lately. S&P 500. This is the spiciest part of a lot of today. We're talking about markets baking in this interest rate cut, right? There's always going to be someone who knows first. And then after that, more and more people know until everyone knows. S&P 500 yesterday put in, isn't this technically an all-time high? Technically an all-time high. Trading like a penny higher than July. Today, Higher low still, red candle, but right up there at all-time highs. Just waiting for Chair Powell to open his mouth. Look at the hourly candles here, holding up near the highs. Man, that looks strong. I think stocks, should I make the call? I think stocks go to all-time high after the interest rate decision, like when Chair Powell's speaking, but then sell off right away. Like we get all-time high, wick back down. I think that might be too big of a call, but it looks like it. I feel it. Do you feel it in your fingers? And do you feel it in your toes? And you got to goes. Attention to the dollar here. Pulled up just clean charts. This is the biggest kicker of like all of it. The dollar. So stocks up at all-time highs. The dollar down at multi-year range lows, showing no signs of strength. Lower highs since 2022. And zooming in here, you can see we've broken December's low down here in August, late August. Another higher low, a test of the same support, another lower high, a same test of support. This support being tested a lot. That support weakening every time. And look at this little candle here. The dollar, I would say this looks primed to dump, but knowing the dollar, it's like probably going to rally because dollar is kind of a dick. Dollar looking super weak, stocks looking super strong. What's it going to look like by the end of the day? I think there's going to be a lot of mix-ups. There's going to be a lot of change. Dude, why YouTube? Literally, if I pull up the GIF thing, it just loads. It doesn't stop loading. It lets it sit there for a while. I will move on. Thank you, Pickle, for doing them. Dump. Robert says dump. Half of Pepe, best community and meme space. I don't know about that, Sonny. That sounds like a shill, boy. That sounds shilly. I've had my tangos with Pepe's. Let's look at Bitcoin. That was a very exciting Tuesday. I should have gone live Tuesday. Tuesday, we did break to a higher high versus last week, hitting 61.4, still shy of my 64K target for this low. We were looking at moving averages. I probably shouldn't have just pulled up all new charts, right? There we go. Grab this. Moving averages on the day playing huge games here. Last week, our Friday rally brought us above the 20 daily, which we were very much hoping for. And to my surprise, above the 50 daily. Closed 3 days of selling. We had a nice candle yesterday that touched the 100 daily moving average for the first time since late August. Now today, hanging out right in between the 150. This is a nice setup. I think there could be a long trade made here with a stop. Well, I'd wait for the FOMC to be over. Below 59, targeting that 64,000. If you kind of look at the chart, think of just the moving averages. Break the 20, break the 50, come back down to the 20, break the 50, test the 100, come back down to the 50, break the 100, test the 200. Maybe you come back down to the 100. That might look something like low being in, break 61.4, move to 64, move back to 61.1. Nice little stair step, nice little staircase up into these big moving averages. Our oscillators look relatively unchanged. Momentum moving up, down to like the 12-hour. Almost anywhere you look, price is directly at major moving averages. It's pretty spicy. Same thing on the 12. Man, the analysis today is going to be scarce. Probably a good thing though. I think doing too much analysis today is the wrong choice. I think today is a lot of sit back and see what hits the wall, see what sticks, right? See what sticks on the wall when you throw it. If the pasta's done. There we go. Getting these in. We are now 13 minutes away from the interest rate decision. What should we do to burn the time? We could shout out Rohit Zazan, Laundrez Zero, Parson Jones, Kyle Hubbard. All the G's making this number spin, getting us up there. Keep them coming. Rate cuts. Should you roulette? I don't know. I always say it's not worth trading these. I love trading, but I love trading with risk management. I think that's going to be hard to do today. LFG, that's right, Hamza. Quick call. Sorry. That's okay. High drinks. Do what you got to do, guys. If you have to leave during the live, that's okay. I ask, maybe you'll leave a tab open. Commute it. Leave a tab open. Stay with us. It's going to be a good one. I really genuinely believe today is going to be the biggest, greatest FOMC of our lives. I want to vape that 𝐂𝐈 to the moon. I got 𝐂𝐈 pulled up. Let's take a peek. Good reminder. I probably got an alert on this and didn't notice. 𝐂𝐈. Fire. We've hit some nice trades on 𝐂𝐈 recently. Another one coming in. We didn't get filled at $1, but 124, 125. Target hit, baby. Hit resistance. Sellers came in. Maybe now we can look for that dollar back test. 97-ish cents dollar. Maybe target $1.25 again. Who made a trade on 𝐂𝐈 recently? Put your hand up. No one's going to see you raising your hand, but I just thought it'd be funny. If you did, maybe put a 1 in chat. Congrats. Well done. If you took any of this, if you made your own trade thesis and nailed it on 𝐂𝐈, pat yourself on the back. 𝐂𝐈, I can't say I like the coin itself. I don't really know much about it. Seems kind of centralized crap, but hey, trade's a trade. 𝐂𝐈 BTC, one of the reasons we were looking for further upside on Bitcoin. 𝐂𝐈's value versus Bitcoin. Closed a bullish engulf last month, continued higher this month, and we're looking for that big old 618 retracement right here, 000022. It's about 10% from where it is now still to the upside. Going to be interesting. Going to be hella interesting. Man, those alerts are just flying in. What's up, Tony? Tony Sandy. What else are we looking at? What else we doing? We've got 11 minutes to burn. Burn, baby. Burn, baby. Goliath Online. I'm just going to start doing StarCraft voices. Did you guys know I was the voiceover guy for all the people in StarCraft? I did make that up. That's like the first time I've ever lied to you. I just thought that would be cool. Wanted to impress you. Goliath Online. Battle cruiser operational. Anyway, Bitcoin rallying into the interest rate decision. Our analysis here might be on point. Rallying into the decision, looking for a reversal on the decision, and a reversal again after Powell speaks, probably bringing us close to this range, 60K. Hello from the UK, Mark. What's up to all of our UK viewers? It's a little late there. If you're staying up for it, it's worth. The Bitcoin realist, so impressed, Tom. I'm glad you're impressed. Not really sure why, but I appreciate it. Blizzard Man, I don't know what that means. You should be the next Optimus Prime. Autobots, roll out. Yeah, I should be. I agree. Make it happen, chat. Pow, pow, pow. Can I get a chirpow? Can I get a chirpow? Chairman Powell. In chat. If you got them emojis, fire them off. Fire them off in chat, boys. We're just burning time. What can we look at? What else is moving? Grooving. Anything. What do we got? What do you got for me? Bring them out. I'm going to look at the biggest gainers here. What's moved? It's moved in the last 24 hours. CKB, a chart. I don't even know what that is. FTM. Ooh, FTM. Don't mind if I do. Don't mind if I pull that one up. Where you at, FTM? Boom, FTM. Money, money. Money, money. There we are. FTM, 56 cents. I was looking again. Kind of the same, I don't want to say it's a problem, but the same thing going on here. We have had really predictable retracements after every high for many months now. Just looking at FTM and SUI, which are not a great sample size or representation of everything, happened again. We were looking for 56.8 here on FTM, but hoping for that higher low at 41 cents first. It did not fill, but there you are. FTM closed yesterday above 56.8. Today, I don't think we actually have a higher high yet, but that is a strong move, guys. Oh my. Look at this. Let me invert the chart for you. Upside down, FTM, what do you see? Even day one traders can identify that pattern. What is it? What is it? You know what it is. You know what it is. It's black and yellow. That's a head and shoulders, my friend. Since the chart's upside down, inverse head and shoulders. Let's take a look. Since we got a confirmation close, use our fib tool. Same analysis we always use from August 25 high to September 6 low, or 1618. Wow, that's some confluence. 1618 sits at 68.5 in our measured move target. 80 cents, baby. That is spooky. A spooky confluence there. just in time for spooky season even. If this inverse head and shoulders does play out as the pattern, what we might look for is a move to 68 cents and then skipping the 41 cent back test, looking for 56.8 as support, potentially looking for a long position there. Oh, that sweet sound of subscribers. Bridging, keep them coming. Looking for a long there to be played up to 80 cents. Boom, that's what I'm looking for in FTM. That is a very spicy, very spicy. 50 is coming, I know. So we got FTM, SUI are like some of the biggest top gainers today. Not a lot of top gainers. Cosmos, Atom, eking out a 1% gain. Man, Adam, what are you doing? What are you doing, Adam? Actually, here's something really interesting. So I'm just looking at top gainers over the last 7 days, right? Look at 24-hour volumes. Look at these. Nervos, Phantom, 360 million, 440 million SUI, Beam at 28. Look at, what is this? What the actual shit? Million, billion, 137 billion volume on Cosmos, Atom. What's the news? What's going on? Something's going on there. That's all of the volume. Anyone have any ideas? Might just be an error. I'm going to look really quick. Might just be a reporting error. It looks like a reporting error, considering Binance has the highest volume and it only has 11 million. Although there are 33 pages of exchanges trading Atom. So maybe. It feels like there's news there. That is a crazy amount of volume for Atom. And it's like 1% move over the last week. But not 1%. You know what I mean? Like that must have been an error. Like even XRP here is like 1 billion. 25 beeps enjoyers. 50 beeps enjoyers. Hit that Veep. Vaping is not cool, guys. Don't smoke. Cigarettes aren't cool. Nicotine's not cool. Yeah, I vape. That's not cool. Don't do it. Especially if you're underage. What else should we look at? I'll remind you, we have less than 5 minutes now. We have 4 minutes and 15 seconds until the interest rate decision is in. A few minutes before, we're going to open our browsers, open our hearts, and we're going to search together for the cutting edge answer, for the in real time answer. I can do that with your help. It's going to be fun. 5 minutes to go. We're just getting through it. Make sure you've liked, subscribed, joined the Discord, discord.gg/TomCrown. Good time to shout out our sponsors, LuxAlgo and MetaSignals. LuxAlgo, the #1 indicator company in the world. I have lots of videos on some of their indicators. They have many free ones. They have some premium ones. Check them out. Use my link. You'll get a month risk-free trial to try out all their premium indicators. Links in the video description below, along with MetaSignals, a very powerful trading signal algorithm. Brought to you by Eric Crown and K-Dubs. Crypto Zombie, good guys there. You can also get a free trial with my link. And any of the links in the video description below, exchanges, etc. if you sign up using them. Doesn't cost you anything. You'll get access to our exclusive private trading group in Discord. It's the only way in. So check them out. Check them out here. Let me see. I've got some cool stuff here. So I have actually Into the Cryptoverse, which won't resize. It won't resize here. Into the Cryptoverse has some great data for these FOMCs and just for Fed moves in general. Treasury yield spread. I have the link in the video description below as well. Oh no. But I guess they're... No. I'm going to get copyright strike by Benjamin Cohen. Why did that start playing? That disrupted my train of thought. Looking at some of this data, Treasury yield spread. We might not have time though. Probably don't have time. Yield spread in the negative since October of 22. I'll have to come back to this. I wanted to look at Into the Cryptoverse stuff. Shout out to Benjamin Cohen and Into the Cryptoverse anyway. Good dude. Good stuff. Dude, his product really is top of the line. Really is. I mean, what would you expect? Going down to the 1 minute chart, just a few 1 minute candles to go. Start Googling. That's what I was doing. I was pulling up CryptoCraft because they usually get it pretty quick. So here are the rules, guys. Once 2 p.m. hits, so in 2 minutes, I want you all to search the webs for the interest rate decision. When you find it, put it into the live chat. But I want you to put a source. Please don't just say 25 BPS, 50 BPS, a million BPS with no source, right? Because those are all numbers. We get it. We all know numbers. But we need to see it from a source that is trusted. And we're going to find that answer together before everybody else. We're going to get it real quick. Dude, my computer is dying today on these. Dying on these tabs. All right, I closed a ton of tabs. That should cool it out. 2,800 viewers right now in anticipation for Powell coming on. We only have 2 minutes for the interest rate decision, guys. Could you hype up the like, subscribe, get the engagement going? Because this is where the spice starts. We're going to get a sneak peek into what Powell will tell us later today. In just 2 minutes, we're going to know for sure the outcome of today, and the spice will begin. The spice will begin. It is getting spicy. And I'm ready. I'm so ready. We've been waiting for this forever. God, forever. Are you ready? I'm ready. 3,600 votes in the poll. Not really changed. About 20% of us still on the outlier chances of no interest rate cut, or 75 or higher, which is 20% of us. 1 in 5 of us. There's 3,000 of us here live. 1 in 5 of us thinks that we're going to get a spicy outcome. I like the optimism. I'm kind of like I don't want to say a grudge, but like usually when I make a prediction, I stick with it even when things change, because it's like, what's the point of making a prediction if you just change it, right? You didn't really make a prediction. I want to stand by my no interest rate cuts this year, but God, I think I'm wrong. You think I'm wrong, boys? Volume spike on FTM? Yeah, it's up at resistance. It's looking hella good, man. Looking real good. Although volume spike at resistance, maybe not great. Maybe not what you want. Let's see. Big wrong, homie. What's big wrong? A million BPS cut. Nice, Jonah. Jonah from the future. Yep, we have 30 seconds. Thank you, chat. Thank you. 15 seconds. Get your browsers ready. Start searching. We're going to be the first to know. Let's go. Put it in chat. Who's got it? Who's got it? Remember, no results before right now matter. Interest rate decision is out. Bitcoin candle starting red, now green. Ooh, the volatility's coming. Dollar dunking, getting wrecked. Let's go. What's going on here? I'm seeing 69 BPS as Bitcoin and stocks ripping. I don't even have time to look. I don't even have time to look at the results. Holy monkeys. Look. Ho-ho! Big green candles coming in for Bitcoin and stocks here. The dollar eating it. Has the dollar broken lows? The dollar has broken lows, trading at 100.4, down lower than September and August's lows, while Bitcoin and wow, let's go, boys, let's go. I don't even know what the interest rate decision was. It is spicy. Put it in the chat. Spicy. It's spiced. Let's go. Whoo. All right. I gotta like collect myself. 50, 50, 50. Is it 50? Is it 50? 50, 50, 50? We got 50? It's 50? Previous forecast. Actual. Whoo. 50 BPS cut. Oh my. Oh my Lanta. Dollar absolutely tanking here for the dollar, at least. It's down like 0.5%. Down 0.5% in 1 minute. The dollar not liking this 50 BPS cut. Let's effing go, fam. Whew. I knew it would be spicy. I'm going to tweet it. LFG 50 BPS. Send it. I don't know. Just send it. Let's just be hyped. Send it, BTC. Bringing this on in. Tweeting it live. That's right. That's right, 50 BPS, boys. What is Powell gonna say now? Oh my. Oh my, that is by far the biggest reaction. The dollar moving 0.5% in 1 minute. Let's see where stocks ended up here. Hold in. Oh, I made the call. I made it. I said this is a real risky call. I don't even know if I can make it, but I feel like stocks, indices hit all-time highs right after that decision. Boom! New all-time high on the S&P 500. 5,700 hit. We're seeing a little bit of profit taken come in here. Dollar likely bouncing on it. A little bit. God, where I got to pull up these charts. Where in the heck are we going to look for the dollar? Down to the next support. Not looking good. Turbo-licious. Is turbo bouncing? 99.5. Dollar likely heading for 99.5. July 23's low. Weakened dollar likely usually leads to stronger asset prices. Let's see. Yeah, that 99.5 looking real juicy here. Send it. Let's check back in on the corn. Corn breaking 60.5, but I'm not even really sure where that would be right now. Let's see. Coming back up. Retesting yesterday's high today. I don't know. 61.3 Tuesday's high. Currently at 60.7. Certainly not a big move. Definitely in the realm of possibility to see here today. However, I don't know, man. We don't have that much time. We got 20-something minutes till Chairman Powell comes on. So far, the FOMC TA still slapping here. Rally in. Maybe this was actually move down, move up, move down. We got 30 minutes. If we're going to break Tuesday's high, I think that'd be a really great signal. Pre-Chairman Powell. Pre-Powell. Close. Damn, that was explosive. Let's keep these on the 1-minute charts. What else is moving? What else is happening here, guys? Ooh, we're almost to 126,500 subs. That's like 500 today. Let's go. I'm going to do something here quick. Turbo. You want to see turbo witch hunting? I don't know what that is. Not touching leverage yet. Bean juice. Don't do it, man. Don't ever feel pressured to use leverage. You don't need leverage in crypto. Crypto has tons of volatility. Leverage is best used as a hedge, or maybe on markets that have like no volatility. The bull run. That's right, Lars. When is Jerome Powell speaking? Daily Facts Official. You're tuned in to the right place, my friend. It is currently 2:05 p.m. In 30 minutes, Chairman Powell will speak live. It's not 30, actually. It's like 25 minutes. Chairman Powell will speak live. We just got the 50 BPS interest rate decision in, and markets are going bonkers. Get hype. Keep smashing the likes, subscribes. Keep it popping. We got 30 minutes to go, and we're going to see Gina, Asian Gina. Dot plot. Do they update that before? Like, obviously, the dot plot is updated somewhere, but I don't know if they publish that until the meeting. That's a good question. Do you guys know anybody? It's 2005, bro. Let's go. Those were better times. Those are much better times. What's up, Mike Lowry? Pump RRP. Dump BT. What is that trio? Kendra. I've never heard of that. Spike over. I don't know, man. The dollar does not look good. So every part of me wants to say Bitcoin looks like it's moving to break Tuesday's highs. And I think that's on the table. I've just seen price action reverse so consistently as soon as Chairman Powell speaks. So in my brain, it's like, well, we only have 25 minutes to do it. You look at the dollar, I think you pretty rationally argue the dollar is broken low again. It was already on support, already tested this support multiple times in the last year. Now it's broken low on this decision. I mean, I think that's a good argument that this move might not be over. Not seeing a bounce that would inspire confidence on the Dixie yet. If anything, S&P and Bitcoin kind of look like they're flagging out. Looking for higher highs. Man. All right. 20 minutes to go. What are we going to do? What should we look at? One thing I am going to do is I'm going to start up the mobile stream. So I apologize if you get a notification while we're live here. You probably will. If you're on a mobile device, go ahead and head over there. If not, stay here. Firing off the short cannon. It's live, boys. Let's go. Let's go. Let's go. The interest rate decision is in 50 BPS, sending the dollar plummeting to new lows, stocks to all-time highs, and Bitcoin kind of unimpressively just like kind of near yesterday's highs. Bitcoin, you really got to get your shit together, man. I know you will. I have 100% confidence you'll get it together. I want you to have it together now. You just get it together for me right this moment. And look at this 4 hour. I like it. I like the 4 hour. Bear div on our highs, but market don't care. Doesn't seem to give a F. Let's do some low time frame stuff here quick. Let's see where that wick high went on the announcement. Wick high 1 minute after. Okay, there we go. Throw a fib on it. It's not really going to get us much info, but just throw a fib on it to keep an eye. I'm going to get rid of that. Oh, I can't wait for Chairman Powell to speak. I cannot wait. I haven't been this excited about Chairman Powell speaking in I don't even know how long. It's been quite some time. Moving this over. Let me check the feeds. Feeds are good. Everything is good. We're fully operational. AK, what's up, brother? Thanks for subscribing. Stephen Armstrong, Ultimate Alerts, Gang Gonjo, Dario, Laz Jack. What's up, boys? What's up, my friends? Today is the biggest, most important FOMC. Oh, wait, the vertical one didn't go live. Hold up. There we go. Now you'll get the alert. Sorry about that. Little false flag here. Ooh, spice continues. Spice is continuing. Oh, my. Bitcoin now retraced all of that announcement's gains right back to where it was. Let's mark this on our chart. Boom, right here. 60.2 being the initial candle of the announcement. Stocks faring better here. Dollar maybe looking for a little bounce. It would make sense to see a bounce. Maybe back to 100.8 and then fall again. You cannot update your video. Yes, you can. You can update my video, and you will update my video. All right, now the vertical is live. Nice. Nice. The mobile stream is live. The regular stream is live. We've got just about 20 minutes. Just about 20 minutes. Until Chairman Powell himself speaks. We did a lot of intro. Tom Powell joined us. Bitcoin, stocks, and the dollar reacting incredibly to the 50 BPS change. Probably the most bullish outcome. What do you guys think? I think I can change the votes. You guys voted like hell. I love it. Almost 5,000 votes on the main stream. 43% of us going with the 25 BPS, which was, I think, the logical choice here. Unfortunately, wrong. No cut, wrong. 75, wrong. 50 BPS, only 39% voted for it. Well done. Well done, fam. Did me proud. Let's end that poll. Holy bonkers. Go to the channel page, click the regular stream. That is right. If you're on the mobile stream, you can go to the channel page. You can join us on the main one. Where was I? Lost my train of thought. Bitcoin, though, retraced the gains it had made off of that candle. S&P 500 about halfway. Half of the gains. I think I did these fibs wrong. There we go. Deep retracement. A little bit more shallow retracement here on stocks. Dude, what is it? What is with these stocks rallying and Bitcoin just being like the kind of special cousin? You know what I mean? Like, hi guys, I'm here. I'm watching you have fun. I'm not. Mom says no, I'm not allowed to play with the other kids. What is with it? When are you gonna get your shit together, Bitcoin? This channel is now just gonna be me yelling at Bitcoin to get its shit together. It's gonna act like its mom. There we go. Chairman Powell speaks now on the chart in front of us. Show you guys quick too. If you're confused, if you're on a stream that you don't understand, just go to the channel page. You'll see 3.1 thousand people watching the mainstream. Got about 80 over on the mobile stream. Shout out to every single one of you. You're all G's. You're all the best. What's up, Flippity Rabbit? NBKN. Cool. All right. Nothing burger. How is it a nothing burger? This was the biggest, most nourishing meal we have had covering these in over a year. Not a nothing burger. Sorry, I'm just getting the other chat up too. So I got both simultaneous. Sub Tristan, Johnny C, Filthy Rabbit. I see you over there. Macus. It went down 50. Wait, what? Can you speak to the Bitcoin manager? Yes, please do. Put in a complaint for me. Nick Young says, smash the likes. You're a smart man. Because crypto is too much uncertainty. Putting your money into extra volatile crypto. Well, there's Bitcoin and then there's crypto. That's what I would say. Coca-Cola says, get wrecked. Was the stream unlisted? Yeah, it was. I just publiced it. That's why I didn't get it. Because Bitcoin is decentralized. I like these answers. Gold is flying. Thank you for the tip off. Let's take a peek at gold. Likely the biggest winner. It was already at all-time highs. And now the dollar tanking here. Let's see. Gold added to the bottom. These charts are getting very tiny. Very, very tiny. Yeah, gold is faring the best. We had a new all-time high. We did hit one, but now sold back off in typical gold fashion. Gold really mirroring that weakness in the dollar. I can't stress it enough. It's not like the most exciting content, but like I cannot stress this enough. The dollar looks so crappy, man. In August, we broke December's low after lower highs here. Lower lows, lower highs, downtrending. The only support left since we hit like 114 in 2022. The only support left is at like 99.6. We're reaching down to there, man. You lose that, and where do you end up, right? Somewhere in the low 90s. Retested 90? I don't know. That's brutal. But gold really, really reflecting that. For gold, at least. All-time highs for gold and stocks. Bitcoin. Go to all-time highs so I can add you to that list. Reef USD nearish. I think I still have Reef pulled up. There you go. Reef stopped us out, lame. Going to 003. There you are. There you are. You don't see the regular stream, 100 Air. To tell you, buddy. Go to the channel page. I'll put the link in there, but you can't even click links on the short stream, so. Smash Toshi, 2.5 in November, 50 for December. You think, here's the next poll. Into the end of the year. 50 BPS cut in. Fire. How much BPS will we get into the end of the year? So not counting this. Not counting today. How much cuts will we get into the end of the year, do you guys think? So let's do like 25 BPS more, 50 BPS more. Let's go 75 BPS more. And we'll do like plus 100 BPS. Vote in the poll. Would Dodge hit $1 by tonight? No. Sorry, Rickson. What's up, J Stacks, Johnny CSE? Sean says 25. Thomas Ratocheval says 50. Antithis says wait for the pump and dump to end. Go long, baby. I agree. I warned you guys. I don't think trading these is the way to go. Let me see. See what this is. See what we had here. There we go. The original FOMC projection here. I hope this is wrong. This is what we originally had plotted out. Interesting that price went almost exactly. Nah, it overshot it. Price overshot the arrow. This is typically what we see. I did say a few times today, if any FOMC is going to kick or not kind of follow the same mold that we have seen over the last, year of these, it's today. Today was the first interest rate cut since the hiking cycle started in 2022. We've been at peak rates for a year, an entire year. The last interest rate increase was in September of 2023. So we spent a year at peak rates. Here we are. I think today is the day that could kick this trend, do something new. Kick off some new cycles. What do you guys think? Gold all-time highs, stock all-time highs, dollars eating poop. Just the way we like it. Gold again breaking all-time high. I'm just going to pull up a gold chart. Curse you, Peter Schiff. Curse you. Curse you. Interesting. We charted gold versus silver. Let's just say this quick. Gold versus silver last month hit the bottom of its range. Silver now in a bullish engulf. I'm looking for silver to go back up to what? May's highs here against gold. And that's an interesting setup because gold hitting all-time highs. Now at 2,600 today. Still looking for a little more. Little bit more here if you zoom out on the gold chart, right? all the way back to the 80s. Get rid of all this rainbow snaz. There we go. Get rid of that. You can see that a little bit higher. It's about 2,650. Will bring us back to a trend line that goes all the way back to 1980, connects to 2011, and has been untested until what looks like this year. It looks like this year. We're going to test it. What happens there? I have two ideas. One, gold rejects from there. We see a big retracement, moves sideways, eventually crawls back up to all-time high. That's probably the likely outcome. The other outcome is maybe gold is going to become a much more volatile asset. I think that that will be suggested if gold breaks through our trend line, trades into the 2,700s, comes back to it, and breaks that high again. If gold has that setup, I think gold is going to behave differently into, maybe we'll say, the end of the decade. I could see gold becoming a much more volatile asset that has more expansive upsides, bigger downsides. That's my 2 cents. That's my take. I'll play the Chairman Powell song here for a sec while I catch up on everybody's messages. I think super chats I missed. Watch your speakers.
Money machine going bird. Chairman Powell, he ain't playing this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing
What do you think?
Federal Reserves in control, making moves, keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
All right. Coming back up. This is what I'm watching more than anything. But Bitcoin goes up, goes down, stocks continue. Not as like interested right now. Right now, all eyes on the dollar, dude. That was a brutal drop. We have seen only maybe a handful of these drops on the dollar in 1 minute on the interest rate decision in a 60-second time frame. The dollar dropped 0.5%. It doesn't sound like a lot because a lot of us are kind of crypto people here. What do you mean 0.5%? For the dollar, that is wild. That is huge. We may not have even seen a candle like that on previous FOMCs. We've gotten some spicy ones, but just put this in perspective. On the 5-minute, look at this. Ready? Boom. It's like it got rugged. 15-minute, boom. This really looks like a crypto that got rugged, doesn't it? Just like trending, maybe higher lows, higher highs, straight down. Straight down to Valhalla. The dollar is, I might make another prediction, and this is a wild prediction for today. I think the dollar breaks 100. I think it goes to 99 something. Maybe while Chairman Powell speaking. As long as the dollar is moving down, I'm expecting to see stocks, gold, crypto move up, even if it sees some retracements. It's not just up. And that is so far playing out ish. Let's see. What's interesting, I was kind of criticizing Bitcoin here for a second, right? What's interesting is while I was criticizing Bitcoin because it had that nice green candle on the interest rate decision, retraced all of that gain, and I was saying, man, what the hell? Why is Bitcoin doing this? Stocks also did the same. Saw a rally to new all-time highs in the S&P, returned to exactly the point where it rallied from off that info. If we weren't looking at the dollar, I would say, man, maybe that isn't as bullish as we think, right? Maybe this isn't giving us what we want. But the dollar is saying, don't say that quite yet. Don't quite get on that mindset, because I just broke to a lower low again after breaking a multi-year support. It's saying, don't count the spice out quite yet, my friends. You're short, Sony. F everyone. You're allowed to be short, bro. Did they announce the rates yet? Yes, they did. The dude, 50 BPS cut. That is more than I thought. Also, it is time for me to admit, guys, you know I'm just a dude. I'm just sharing my thoughts, my analysis with you. I don't claim to always be right. Here's another one of those times where I was wrong. All throughout the year, I said, I don't think we're seeing interest rate cuts until after election at the earliest, but most likely in 2025. I'm going to own up to it. Yeah, I was wrong. Today we got a 50 BPS cut with now very likely more cuts into the end of the year. I should have put 0 as an option, but I didn't. How much do you think that we will cut into the end of the year? I believe we have 2 more meetings. So if we did 25, 50 BPS, that would round us to an entire 100 BPS in the end of the year. Interesting. The rate at which we increased rates was so slow. It's 25 BPS, 25. And then we plateaued for a year. In September, we hit peak 5.33%. Today, in September, we cut 50. Slow up, fast down. Do you think that will continue? Or do you think that is just a one-off? What's up, Bad Baptist? You're a Chad, bro. 3% is the new 2%? I think so. I think that we will go. I think we're going to go to 3%. So I was doing analysis on this last night. I don't know why this doesn't work like it did. Maybe it was like the year or the 6 month. No. Got to use the regular chart. I was just looking at the previous cycle. That's not bad. All right, the 6 month, a little bit better. Using that fib got us to 5%. So I'm like trying to chart this. Is this a good idea to chart? Probably not. It's probably meaningless to chart, but hey, it's fun. It's fun. If we want to do really base analysis, just SR, right? We'll just say, okay, 2018, 2.5%. That was our resistance, right? That's where interest rates reached in January of 19 before, obviously, March, they undid everything really quickly. Maybe we'll see interest rates continue to drop till they reach 2.5%. What do you think about that? I think 2.53% is like the zone. I don't think, here's a bold take. I do not think that interest rates are going to go right back down to 0 like last time. I don't think that's what's going to happen. Provided we don't have a global catastrophe that shuts everything down, I don't think we see that happen again. I think what we'll likely see is consecutive cuts by the Fed over the next year. That brings us down to maybe 2.5%. Maybe then we see a bounce. I don't know. But this is likely where the Fed wants to keep them. The reason being is if the Fed just cuts all the way down to 0 again, if we do have that disastrous event, they won't have anything to work with. They won't have the tools. And that's kind of the scenario that the Fed found themselves in going into COVID. They had begun cutting. COVID crashed everything. And they just put them to 0. And the problem was that they didn't have any more rates to cut as things got bad. They weren't willing to go into negative interest rates, etc. So I think they're going to keep them maybe closer to that 3% and then have a little wiggle room if something happens, right? Was it the year? One of these perfectly hit it. Here it was. All right, I showed you guys the 3 month in the beginning. I guess it was the year that I was looking at because I was like, one of these is perfect. Using our fib tool on the 1 year T-bill yield. Really spicy. Right up to that measured move. Exactly. Is the Fed doing TA on their interest rate changes? If they are, I'd have some tips for you. I have some tips. Depends what you want to do. Do you want to pump and dump these or do you want to keep them high? They probably want to keep them high. But right to the measured move. I believe it's 5.22. This is exact. Kind of spicy. Here's my advice on the Fed. If you want to manipulate your chart, here's what I would do. I would send rates back down to 0, okay? Maybe I would hold them at 0.5. Test this low again, right? And then here's what I would do. I would take my fib tool out. I would look up here and I would aim either for the 1.618 or the 2. So then I would look over the next few years to increase interest rates to 8.2 or 10.25%. Might look something like this. So this is what they want to pump and dump it, right? There you go. Start making this upward trajectory. That's what I would do. Right here, Fed. Powell. There you go. You can take this. You can have it. It can be yours. You can just say you did it. There you are. The Fed's long-term decade plan to raise interest rates to 10%. All right, enough goofiness. We've got only a few minutes now, boys, before Powell is live. 2, 3 minutes? 3 minutes? The anticipation is palpable. 50 BPS cut kind of took some people by surprise, myself included. Powell going to be joining us in a few minutes, and he's going to have to tell us Why? Why did you keep saying things weren't where they were supposed to be? Things weren't where they were. We want this, we want data, we want whatever. Why? If you were just going to cut them in September by 50 BPS, why didn't you cut 25 last time? And then 25 today. He's got a lot to answer for. He will likely be sweating it. That's what I think. He'll be sweating it. Set up. Okay. We got the Fed's like copyrighted weird music that they play that I think got us demonetized once. There we are. Up in the corner. Just a few minutes away. Are you ready? If you're ready, smash the like button. Subscribe. The spice is just beginning. It's just begun. Let's see here. 2,000. Got about 2,500 or 2,800 viewers. Still on the main. Hopefully those numbers are going to climb into the chirpow. I want this to be the biggest FOMC. It is the biggest FOMC. Even if no one else shows up. We got the fam. Even if no one shows up, this is the biggest. Because something happened. They changed up their menu. Nothing burgers off the menu. Inflation took them off the menu. They got too expensive. Crypto face still here. Yo, where's he at? You like Chirpow? A Chirpow? Yo, Mr. Steve. Chirpow's great at his job. He's a great speaker. It's not his fault. The country's where it's at. Crypto face with the wisdoms, man. 100% agree. We can hate on Chirpow. You know, hey, you didn't do what we want. You're not pumping our bags. The dude is the only person in all of like the political world, because he's not in politics, but in the political world spectrum, that keeps it nonpartisan, that doesn't cater to like all of the BS people throw at him. I agree. I think he's great. He's also a celebrity. I see Steve. What's up, Steve from Optical Art? We have a lot of creators in this channel watching. Give Steve a subscribe. Great dude. Great analyst. Love him. Shout out, Steve. Shout out to you. He's on the spectrum. Everyone's on the spectrum. 20 seconds. 20 seconds. I'm going to refresh this. I'm going to just real quick reload. Are you ready? You ready? Steve is a great name. It's a great name. Let go. Are we going to drop before we pop? Oh, probably. Actually, honestly, this looks like we going to pop. We going to pop when we pop. We were looking for the downside, man. This was the spiciest interest rate in. Huge green candle on corn, on stocks. S&P went to a new all-time high. Both retraced all those gains. Now Bitcoin up a little bit from where it started. Up a little bit. The dollar taking the show here. The dollar eating absolute crap as Chirpow joins us. Shh. Shh. Gina. Where's Gina? Gina. Oh, wow. Quiet. Yes, that's him. That's Chirpow. The man himself. Ooh.
Good afternoon.
Good afternoon.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019.
Let's go Bitcoin.
The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Steal a speech from
For
Tom
much of the
Powell.
past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so.
Go.
We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished, and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Questions? Gina. Asian Gina, then back
Steve
to Asian
Leachman,
Gina.
CNBC. Thank you, Mr.
No.
Chairman, for taking our questions.
Shut up.
In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
Nailing them. Get them. Eat them.
So, okay, a lot of questions in there.
That was a lot of questions. It was. That was.
Let me jump in.
It's a joke.
So, since the last meeting,
What color is this
the
tie?
last meeting, we have had a lot of data come in. We've had the two employment reports, July and
colorblind.
August. We've also had two inflation reports, including one that came in during blackout. We had the 𝐂𝐶EW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
So that was a question. Correct.
Sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
What if I want it now? When moon, please. Gina, again.
Hi,
Gina.
Chris Rugaber,
You're not
Associated
Gina,
Press.
bro.
Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year.
Yeah.
So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? then. Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level, so that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral, and we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard?
Gina, Asian Gina at least.
Howard Schneider with Reuters.
Wild
How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
Yeah, we're gonna take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina.
Let Gina talk. No more Mangina. Let Gina talk.
Hi, Chair Powell. Gina Smilik with the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
Beautiful question from a beautiful lady.
Again, the labor market is actually in a solid condition, and our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Answer her better. Look at.
Sorry, Nick.
Answer. That was. We just got rugged again.
Nick
Everyone's
Timmeros,
quiet.
Wall
They
Street
don't know
Journal.
what to do.
Chair Powell, does today's action
Chair
constitute
Powell.
a catch-up in action
Powell.
given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Go back to Gina.
Multiple questions there, but so I would say we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace.
That's what everyone literally is going to do.
Think about it in
it.
terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
That's an interesting question. I think of that.
Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. Meant by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market. But this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, the retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
It bears
just
watching.
On the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that. because there is thinking that the time to support the labor market is when it's strong and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
The totality of no data.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be
there is no
watching
data. Great question.
all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's
in the room with
action
us right now
as a sign of our strong commitment to achieve that goal.
Oh no, it's not here. It's not here. Asian Jean.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, that could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change, particularly over the last few months. And so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. No, on the Friday before the meeting. And inflation data, we'll get all this data, we'll be watching. It's always a question
Data.
of
We'll take the
look
data.
at the
We'll-
incoming data and,
We'll put
and
it
ask
together.
what are the implications of that data for
Then
the
we'll take it apart.
evolving outlook and the
then
balance of
we'll
risks.
look at it,
and then
turn
go
it
through
a
our
little
process
bit.
and think what's the right thing to do.
And we'll
Is
think about
policy
it.
where we want it to be
This is the
to
Fed.
foster the achievement of our goals over time? So that's what
Then-
it
then
is,
we're gonna-
and that's what we'll be
We're
doing.
gonna make a wish on the data. Only if we see a shooting star.
Hi, Chair Powell. Neil Irwin with Axios.
By the way, this just in, the dual mandate is now a dual mandate, and Chair Powell is forced to fight to the death with me after this speech.
Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes, so we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I mean, I think we are, it's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if
He
not
is
at
rambling
it,
today.
so that further declines in job openings will translate more directly into unemployment.
A little bit rambly.
It's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
So the next interest rate decision will be settled by a one-on-one, as the
Thanks, Chair
rules
Powell.
of the
Edward
dual
Lawrence,
mandate
Fox Business.
require.
So we've heard some speculation that
Lots
you may be
going on.
going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, and you mean after we get through all of this? It's just great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. Again, we only know it by its works.
And one more, how do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And it's something we all take very, very seriously.
Yes,
we don't
very,
put
very
up any
serious.
other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene.
Love you, Mr. 100. Thank you, Ming.
Thank you.
Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say
better
that
than ever.
The U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time, and the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy, and we'll do that by returning rates from their high level, which has really been the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not doing, we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
I'm encouraged by Asian Gina. Very encouraged.
Hi,
I'll just go
Katerina
back to Gina.
Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels, but they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this, but the direction of travel is clear, and as long as market rents remain, relatively low inflation over time, that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So that's, I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Let's go.
Hi,
Let's
Victoria
go.
Guido
What's
with
up, True
Politico.
Face?
Just following up on some of the labor market talk earlier, you know, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, you know, business people who are actually out there doing business. So I think, you know, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, you know, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but you know, we might well have. I think that's not, you know, that doesn't really answer the question that we ask ourselves, which is, let's look, you know, at this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? It's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the paths forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Elizabeth. Thank you, Chair Powell. Elizabeth 𝐒𝐚𝐫𝐿 with
Chair Powell,
ABC
drink.
News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, you know, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. You know, we just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy, of course, and of course people are experiencing high prices as opposed to high inflation, and we understand that's painful.
Greg.
Hi, Chair Powell. Greg Robb from MarketWatch.com.
Real quick here, Bitcoin holding on to a little bit of his gains since the interest rate decision came in. Stocks now, this is interesting. Stocks now below where they opened. I was talking about, oh man, stocks holding up better. Guess not. Breaking below the traded value, now coming back up, testing that as resistance. The dollar, oh, that's gold. The dollar almost back to where it started as well. Even though this went for like a little different trajectory, kind of the same trading pattern coming here, but we get a move in one direction that reverses and we end up pretty close to where we started.
Could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday? You know, after the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that.
He sounds very nervous.
We're always going to try to do
What's up, guys?
what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
That's what we'll do. We'll do what we think we should do, and that's what we'll do. He's getting tired, dude. He's like,
Thank
he's
you, Chair
getting tired.
Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
He's tired. He's like trying to keep his eyes open. It's like
Matt Egan
being
from CNN.
sleeping right here.
I know that you discussed earlier how the Fed does whatever the right thing is and nothing else
And
factors
with
in.
no
But
details
in
at all,
general,
just that
can
you
you talk
do.
about whether or not you believe a sitting U.S. president should
Oh,
have
no.
a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world, countries that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope, and strongly believe that it will, continue.
Chair Powell, do you need a nap right now? Are your naps related to the interest rate cuts?
Banker. Thanks for taking the questions, Chair Powell.
Chair Powell,
couple
drink.
Regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday, other banking regulators.
You know what? Hold the second question.
Hold it.
We'll give you the
He's
second
like,
question.
I'm too tired for more than one question.
The answer to your question is that, yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about.
I'm going to propose to Asian
and then
Gina
take
and
comment
Gina at
on
the
them.
same time.
So yes, that is
Three-way marriage.
that's happening with my support.
Don't ruin the surprise.
Date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a calendar date for that. And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment, and then it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
Right. And then yesterday there were merger reform finalizations from the other bank regulators.
Hipster Frodo.
What does the Fed have
Oh,
to do
God,
to
that's
align
savage.
itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today.
Here, Barr said 50 was too much yesterday. Yeah, last question. Asian Gina and
Thank you,
Gina
Chair Powell.
again.
Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage. So very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. The stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Oh, you're committed.
Vulnerable to a shock now that could tip it into recession.
I don't think so. I don't. As I look. Well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn, is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that. No, thank you.
Thank you.
Okay. Thank you, Sleepy Chirpow. That was the biggest, most explosive FOMC of our lives. Wow. So let's recap here. 50 BPS in. Surprising me, surprising many. We did get an interest rate cut. That's the first one since we hit peak interest rates back in September of last year. So exactly a year ago. On the announcement, at exactly 2 o'clock, we saw some very spicy price action. Bitcoin and stocks rallied hard. S&P 500 hit all-time highs. However, at that time then, Bitcoin and stocks went all the way back to where they started on that rally. The dollar maybe having the biggest shakeup here. The dollar dumping 0.5% in 60 seconds. Huge move for the dollar, breaking down multiple multi-month year lows here. Now back to where it started. We say this every FOMC. This one did play out a little different, but it looks like it's coming in and fixing that at the end here. The dollar, big old dump back to where it began. This is going to be the point to watch as we see it happening right now, 100.87. If the dollar continues past this mark, the day has just begun on the spice. Wow, there it is, literally just seconds after Chair Powell ends his speech. With the weakness of the dollar and a bigger macro picture, I can't help but be bullish on stocks and Bitcoin, surprising my audience. Oh my God, Tom Crown's bullish. Can't say I really expected this like price action though. Bitcoin really in the last second just testing that open. Now maybe opening to a red candle. S&P 500 really battling it out here. 50 BPS was supposed to be good for risk assets. It was supposed to be good for markets. I wouldn't take, I don't know, it's been like an hour. I wouldn't take an hour after this announcement and be like, that definitely wasn't or was good as an outcome. This is something we're going to see evolve over the next few days, weeks, and even months as the Fed has committed, obviously, to more interest rate cuts coming in the future. This is a hell of a stream. A lot of the time we hype these up and maybe they aren't as interesting. But this time, this is the first nothing burger that we haven't been served. The first missed nothing burger. This was a something burger. But I will say the last thought here, the questions and even Chair Powell's energy. Wow, the dollar passed where it started. Really 180 the whole thing. It's very exciting. And man, that monotone, no data, we're going with the data, really drove the energy in the other direction. I was like falling asleep during that. The audio was terrible. I could barely hear it, so I was doing my best. What's up, Jedi Master? Jedi Master Ham. Nice. Subscribing. Man, a lot of thoughts, a lot of stuff going to unravel, I would say, in this week. We got Thursday and Friday ahead of us, and things are getting very spicy. The last thing I kind of expected is for nothing to happen. Though things did happen. The dollar broke really critical support. The S&P 500 hit all-time highs. I guess what I want to say is I really was hoping Bitcoin would do something. I really hoping Bitcoin would do something spicy. Apparently not. Apparently that's not in the cards. Maybe that's going to be coming up later today. I don't know, man. I appreciate everyone from tuning in. We'll be covering, obviously, the next FOMC, where they'll have another interest rate cut. It might not be the biggest ever next time, but we might call it that anyway. You guys rock. We've had I don't know, close to 1,000 new subscribers during this live stream. You can see those numbers still rolling over. 126,700. All we need is 2 more. Great stream. Thank you. I tried. If you missed the intro of the stream, Tom Powell did visit us, did give us a little speech, prepped us on what was ahead. God, I love that guy. So smart. Chair Powell, keep looking for that data, bud. You'll find it. Asian Gina. Okay, this is the last update. Asian Gina looked immaculate. Immaculate. Asian Gina. Whoo. Gives me the vapors. Gives me the vapors, I'll tell you. Anyway, we will be live again on Friday at 1 p.m. East. We're live here Monday, Wednesday, Friday, 1 p.m. East, and any time Chair Powell speaking basically in between. We'll be hitting that analysis hard on Friday. So I hope you join us. Jump in the Discord, discord.gg/Tom Crown. Join our community for the goodies, for the best 24-hour live chat, crypto nerdin', chart nerdin'. Join us. Discord, I'm trying to copy and paste it. Discord.gg/Tom Crown. Sign up with any of the links in the video description below. They are affiliate links, however. Sign up with them, and you will get exclusive VIP access to our private trading group in Discord for free. Check out our sponsors, 𝐒𝐴LGO and Meta Signals, and boys and gals. That's all we got today. Thank you for joining. I love you all. I'll see you Friday. Hopefully